The most important things you need to know about buying a home in San Diego in 2024. Devin?
Well, being the lender of the group, I say get qualified right away so you know that your goals are matching what you can actually afford and what you can actually qualify for.
What are the things that actually improve your purchasing power and detract from your purchasing power?
So I guess with anybody, we look at the overall picture, right? The credit report's going to determine what you have for monthly debt obligations. What a lot of people don't understand is we can move the needle a lot when it comes to the pre-approval by paying down or paying off some debt rather than putting more money down. There's other things like interest rate fluctuations and can we like lower the rate with discount points or other things. But once again, it's part of the overall picture as far as their debt obligations and that, that housing expense.
So I've had a few experiences. Luckily, we've never tanked the deal completely, but I do know that I've had a client purchase some appliances while in escrow, and their debt to income ratio was super, super tight and actually disqualified them. Luckily, they were able to get gift funds from their family to fix that problem. Wow. But something similar to that, what are other things that you could do of like, all right, you've gotten pre-approved, things are happening, you're home shopping, you get your offer accepted. What are things that can like dramatically alter your qualifications?
Right. So we're talking about do's and don'ts of home buying. Do not open any new credit lines. Of course, like Greg said, that will increase your debt to income ratio, lower your pre-qualification. If there is anything that you need to obtain, you definitely want to talk to the lender after your pre-approval. So once again, important to get pre-approval so you can have that baseline set. And if anything does change, at least you can have, talk to the lender about that.
Yeah. The experience that we've had in the past is, someone who started home shopping and then they go on maternity leave. They're buying a bigger house because their family's growing, but they didn't inform you about, not working currently because they're on maternity leave.
Another don't quit your job when you're searching for a home or you're in the middle of escrow. That can drastically affect your approval as well. Job changes are okay as long as you relay that information to your lender. Your pay is going to be the same or greater, and then it depends on if your salary, hourly, commission, tips, whatever, that can have an effect as far as the timing to prove that income. But it is okay to have a job change. Just once again, run it by your lender first.
What is kind of like the sentiment of buyers in the market right now? Like, what are they seeing? What are they expecting? What's kind of like, why are people buying right now with, interest rates over 7%? The inventory is still super low. Like, what's motivating people to move right now?
So for first-time home buyers or move-up buyers, we're seeing a lot of investors are still there as well. But what's driving that is, I believe, through the discussions that we've had, it's those that are getting ahead of the oncoming wave of more buyers once rates drop. So they're getting in now, understanding there's less competition. They can still negotiate, on those deals, and then they just know in the future they'll be able to refinance and lower their payment.
What metrics are you looking at that are showing that like there's a pent-up demand in the market?
So inventory is one. I'll let Greg talk about that. Two is the large home buying age or demographic of millennials and Gen Zers, 60 plus million. Everyone thought that the boomers of 20 plus million were going to sell and downsize and free up this inventory, but it's still not enough. So I believe the stat is for every 1% the rate drops, 5 million home buyers enter the market. So when we're talking about pent up, home buyer demand coming, there's a large wave, and I believe that people are getting in front of that understand that data.
Yeah, the Gen Z is the largest population. They're bigger than the baby boomers numbers wise, and so like you said, they're coming into buying age. If the interest rates come down, their affordability is better for them, so they can buy more houses. And talking about inventory is pre-pandemic, pre-COVID, we had around 14,000 homes on the market at any given time in San Diego County. And now we have somewhere around 3,300, which is up from around 1,200 during pandemic time. So our inventory is still massively emaciated. The baby boomers are holding on to their homes because they don't want to sell, they don't want to relocate. The prices are going to be higher. They might have to do a reverse mortgage in order to keep within their monthly budget because they are retired now. So most of them are holding on to their homes. So we're seeing a lot of people inheriting their parents' home and then having to sell them is the really only way that inventory is really freeing up, other than the normal movement of moving up, moving down within normal purchasing timeframes of people's lives.
Correct. And I would throw in my generation, Gen X, that a lot of Gen Xers want to move up, but we're kind of rate locked in our homes in the 2 to 3% range. we have what we want or what we need, not really what we want. So that's going to add to the pressure when rates start dropping and inventory goes up. It's going to be Gen Xers will be entering as well for the move-up purchases. So a lot to be watching, but the home buyers now that are getting in now understand that they're ahead of that wave or that demand that's going to be coming.
They also might just need to buy a house.
Right?
So it's a matter of also, they may not be aware of it, but I think in hindsight, they're going to be very happy they purchased right now because it is tumultuous right now. I mean, it's an election year. Interest rates are fluctuating all over the place. I mean, I've seen as low as 5.99 this year and as high as 8% this year. And anything and everything in between. So it's what we're trying to say right now is that we don't have a crystal ball, but the metrics and the data is showing that the inventory is not satisfying the demand, and the demand is going to grow exponentially when interest rates drop. So if you're on the fence right now and you're thinking about buying in the next 6 months to 2 years, you're gonna pat yourself on the back 5 years from now that you struggled, you made it happen, pulled money from where you needed to pull it from, and you just got into a home that is good for you. So what are we seeing in the market right now for people, like competition-wise? Like how many buyers are you seeing where they're getting massively outbid?
So every transaction for every buyer that I have working right now, we have double-digit buyers out there shopping at all times. We're seeing multiple offers because there's a lot of competition on the property. We're seeing over asking price. We're not seeing sellers give up much in credits unless it's later in the negotiations when the home inspection comes through. But if you want to go in there and say, hey, I need $15,000 in closing costs, that's not really happening right now. Each case is different. It may for you, but it's not across the board generally happening. It's still a seller's market.
So what we're seeing over on the real estate side is, when homes kind of fit into a couple different buckets. You have the luxury market where no one needs to buy a $5 million or more house. They want to buy it. And so that market is pretty much recession proof. You'll just see how their financing changes. So if we get underneath the luxury market and you go into the more, for San Diego, $2.5 million to $500,000, kind of your average San Diego market pricing. What we're seeing is products that are priced well or presented well are selling within the first week to 2 weeks. And then we're seeing homes that are either priced too high or there's something wrong with the home, close to a highway, close to, noises, or, the layout of the house is not really ideal or functional for that neighborhood. We're seeing those houses sit on the market for 3 weeks or more. So right now, if you want to be successful as a buyer, there's a few things you can look at. Is one, how long has the house been sitting on the market? And does it appear to be priced a little high? Because they might be about to reduce their price if they're on the market for around 3 weeks. So you can kind of get in a little early, negotiate before they drop the price, and then the interest resurges on the property, and the price can go, sometimes I've seen even back up to the original list price or even higher when they've dropped the price. So keeping an eye on how long it's been on the market can be key for you to get a good deal before they drop the price. The other thing is, being okay with a little bit of a funky layout or something that's odd about the house if it works for your family and for you.
Yeah, I mean, I have one in my neighborhood that just fell out of escrow. So it went into escrow immediately, full price asking. They got full price for it, and nothing wrong with the property. It's a renovation. It's actually a really well done renovation, but buyers got cold feet. Now it's been sitting on the market, so other buyers are thinking, well, what's wrong with this property? However, they're getting ready to do a price reduction, and that's exactly what they're expecting, that they're going to have another push of interest because the price is dropping. So the things you should do when you're purchasing a home on the lending side, do understand what you're being qualified for and why. Ask questions. Go through the process of understanding, how did you get your qualification amount? Where are the interest rates coming? Why are you quoted these rates? What is the difference between rates across different banks? Are they charging you fees? Are they charging you points? Are they charging you, other type of application fees that are going to allow you to get that lower rate? Do understand what your homeowner's insurance is and what it covers. We never had to worry about this in the past, but with the changes in the insurance industry, we have properties, unfortunately, that aren't being covered by insurance, or those policies are extremely higher than what they normally would be. Do review your HOA documentation so you understand if the HOA is financially sound. As a lender, we'll review it as well, but we don't want to find that out later in the transaction if you're not reviewing it immediately with your realtor and your lender.
Making sure that there is no upcoming litigation, that the SB 210, the balconies thing, is not going to be affecting the community, as there an increase of HOA dues coming up soon. Those things will also affect your affordability in the home. Understand what's going on with your HOA in the sense, are they in pending litigation? Are they going to be increasing the HOA dues? Did the SB 326 affect the community of the balconies need to be renovated, so there's going to be a huge cost, so there's going to be a special assessment, or again, the dues are going up. So understand that aspect of the home too. What you want to be doing when you're working with a real estate agent is sit down and actually have a consultation. I work with so many different people that have worked with a different agent before coming to me, and they have no plan, they have no understanding of how to succeed in this market. So sit down, have a consultation. Next would be to understand that your ideals and the market rarely ever align. I don't care what your purchase price is, you're going to have to give up on something, whether that's location, amenities, size of the home, size of the lot. Something is going to have to give, and you're going to have your expectations and the market need to meet together for you to be successful. So be flexible in the process. Have open communication with your real estate agent and your lender. If you're not liking what you're seeing in the market, make sure that you tell us so we know how to shift our search. Or that if you're having a job change or an income change or something is happening in your life, make sure you have a good relationship with your lender and your real estate agent so you feel comfortable sharing that information before it's too late.
Understand what your closing costs are. That's part of the lender's consultation, but most people don't understand that there's $15,000 to $25,000 in additional fees beyond your down payment.
There's a lot of information floating around in the market right now. To make sure that you're getting the best information that's up to date and actually customized for your wants and needs, please reach out to myself or Devin. We'll set up a free consultation for you to make sure you are successful in your home buying process.